Okay. Late good afternoon to all. It's about 4:42 p.m. I'm sorry we had a mic issue and we couldn't get started. I'll be quick. I'm sorry I couldn't do this yesterday. I had a bad day trading. Size was a little bit bigger than normal. Market was volatile. And I made one mistake. And of course, a problem is we tend to be hard-headed, and you say, "Oh, and I had one of my best days the day before." Okay, so what you do is you become cocky. No, it's got to go there. That's my number. That's my target. It's got to go there, right, Dennis? You've heard that before, and of course, it didn't go that number. So I was not in a good mood by the time everything closed. And of course, I overtraded, so my commissions were high, and so I just said, so. And I said I needed a break, so I didn't do it last night. I apologize. Good. Couple of things quickly, as always. If you need to be on the sign-up list with us, it's always I'll see the date. It's March 16th, and that's there. I'm sorry, it should be Thursday, March 16th. I didn't get a chance to change that. I gotta change the date. My bad. It meant Thursday, March 16th. Again, we're still waiting for Mr. Marshall Freed. He's in Antarctica, believe it or not, South Pole. He's coming back, and by end of a month, and he should be ready for April 11th. I'm going to be out of town April 15th, 14th through that weekend. The Friday is the 14th. I leave after the close. I got to be in San Francisco for a couple of days, and it's my best cousin's birthday. And people coming in from all over the world to join us. Unfortunately, I know there are a couple of folks in San Francisco who want to catch up with me. This is the wrong trip because I got to be back. And so I'm actually flying red eye on Sunday coming back. I'm not taking Tico with me. We just want to be quick in and out. I'm flying out of Miami direct to SFO. And so he's going to be in his couple of his girlfriends. Yeah, Dennis and I went to a ball game the other day. I understand he nailed 3 of them. So according to the girls at the Camp Ball. So his nickname now is an additional nickname. It's not just Admiral Tico, but one of them is Casanova. Yeah, I wonder where he learned that lesson. Yeah. Anyhow, and he is very hard-headed. Trust me, he is such a gotta do it his way or no way. Okay. So webinar today was about yesterday and today. We'll go over some charts. Last housekeeping item. I know you're probably going asking me what's going on. Well, what's important is this: the other trading. 4.91 is here. I will post that. The differential was a couple of algorithm issues that had to do with order management for system houses. As you know, we have 2 system houses in Chicago that trade this. This is for people who are busy, don't have a chance to sit in front of a trade station and trade during the day or even watch it. Mainly doctors, dentists, lawyers, that kind of stuff. And so 4.91 is here. We will update this to reflect both the results and our schedule here. Okay, 9.1 came in 24 to give us what we call a super band-aid or bridge to 5.0. I just heard from our programmer who's doing the 5.0, which is we're kind of going around, getting around the TradeStation API because there are some known problems there and they're not fixing it. They're too busy with other things. I can't get into other things because I've got some NDA issues with them. I can't get into that. As you know, I've been a solution provider with them since 96-ish or so. And I've used TradeStation from like 93, 92, 93. So, but anyhow, I will add another item here, 4.91. That will be our bridge to 5.0. Our release date for 5.0 looks like they're going to be a few days for the preliminary alpha article, which is like internal testing only, not even for chat room. But that should have been over the weekend. This weekend, I think they're going to miss it. I told them give it to me on Monday or Tuesday. It's a Persian New Year, my New Year's gift. But I'm not sure they're going to make it. Anyhow, user guide is up. Okay, we will post over the weekend. We'll post the back testing. I want to give you guys also a comment about back testing. And I'm going to read this. Okay, this is from TradeStation. According to TradeStation, the primary purpose of backtesting is to execute the code. It's not necessary to determine if the strategy will be profitable or not. The walk forward optimizer is a better choice to examine profitability. That said, Backtesting can be used to be a good indicator of profitability if it's used wisely. And this was a documentation they sent me with a lot of detail about how a good backtesting is done. We try to follow those protocols, but we are posting so you guys get a chance where we are. This is about this is a 12,000. It's a hold on. This is about 1 year results of NQ. Now back then, the NQ margin were about 2.5 times what it is now, and we were running about 10x. You know, yeah, because it was a little bit more down, almost like 11x. Because it takes about 11,000 now. I'm saying it used to be about 12,000 to run this system for a year. Now it's 5,000 because they lower the margin. I think it's competitive reasons. Now remember, at that rate, you have more liquidity, but also you have a lot of novices coming in with lower budget, and so it becomes very wild. Be careful. I actually like higher margins to get rid of the noise. But right now at 5,000, and we're doing about I forgot our latest back test looks like with our some parameters change very little, mainly with stops because we have to respond to volatility changes, and that's in the user guide too. As the volatility regime changes, you have to adjust just a tiny bit, and we have to have logic what we do. We're not doing randomly changing all variables to get the best results. As a matter of fact, what we post is not the best results. Why? We're very conservative, where we try to be that way. Now, somebody says, "Are you really you're conservative? You're trading futures?" Well, within that space we are. Okay, trade station. I mean, uh, trading futures is very risky. That's why we always, if you look at my emails, it's in the bottom. Past performance is not indicative of future results. Trading futures is not for everybody. That's from CFTC. We have to tell you that. It's a buyer beware environment. We cannot not tell you that. Okay, so please make sure. And also guideline: 5%, maximum 10% of your liquid assets. That doesn't count your house or cars and all that. Liquid doesn't count your Persian rug and jewelry. It's not like 1003 when you apply for a Fannie Mae loan. A bunch of those. I had a bunch of Persian clients in LA. They write all these things up. 200,000 Persian rugs. How do you know what that is? Now you're going to sell it. That's not liquid. Liquid assets. Okay, you got to have a pretty high bar for that. Why? And no more than 5 to 10%, because you're going to get frustrated. It has to be risk capital. That means you can lose it and doesn't change your life. That's the amount you can match maximum trade. No more than that. You cannot trade your last dime. You're going to lose it. This is it. And the bigger your account and the smaller bet size as a percentage of the account, the better you're going to be. Okay. So please, these are just red herrings I have to go through. All right. So let's get on with what you guys are here for. Again, on 5.0, let me finish 5.0. On 5.0, which is working tickets. I'm saying order tickets, which it goes around API issues that TradeStation has, and that we all have we've been all impacted by it. Probably in a couple of months. I think maybe in 6 weeks we'll have something, but I would like to say 2 months. That's why we worked so hard on 4.9 and 4.91 to build a bridge to that, so we don't have to every day deal with issues, try to fix this, try to fix that. And so, and we had a couple of cancellations because people were frustrated. I told them, cancel, go out, wait. Why? So because we're having two issues. At larger scale, we're having problems. We're a victim of our own success. We have a lot of people trading it. Okay, and NQ and MNQ, they're not as liquid as ES, and so we used to get overfill and underfill. This new code attacks that. It keeps track of it and says you should have been long 27 contracts. You're long 23. Buy 4 more. Okay, so you see what I'm saying? That kind of stuff we have built in, and it's been costly. I have 2 heavy-duty system programmers from very, very high up levels of TradeStation that are retired, and they're working for me as contractor, and I couldn't thank them enough. I've learned a lot from him, and of course you can see in the maturity of the code. Code is now 2,300 lines. Just the main strategy. We have indicator, and we have another 15 or so functions. So I'm guessing. I've never opened all 15 of them, add up the lines, but I'm guessing. At 300 easy each code, each one you're taking another 3,000 there. So we're over 5,000 lines. So if something goes wrong, it takes us a while to figure it out. It's not easy. That's why we're taking so much time before we're releasing it, go over it, and all three of us work on it. We actually have a dedicated uh, uh, remote machine that we all work on at the same time. We can see everything. All of us see the same thing. So yeah, occasionally we're going to find. I apologize. I had to send a couple of extra updates. Listen, if we find a mistake, we got to let you know. Yeah. And most likely it won't impact you, but we don't know, and we have one code. We cannot have multiple codes. So we do have to give you, and that's part of software development. Remember, software is never finished. It's never finished. You will always find a way to improve it or have a bug you have to fix. I'll say that having some of you know that I worked on a B-2 bomber at Northrop, and you can imagine that aircraft, that wing, the flying wing, inherently is aerodynamically unstable. What make it flyable were the computers. I'm not going to get into the details. I have a lifetime NDA, and you're dealing with federales if you do say something. So it's not a joke. It's like other NDAs that we hear in the news these days. This is you're dealing with federales, and just you could imagine how many millions line of code we had among X number, XX, 2-digit number of computers that were on board. So you've got to come up with a procedure and protocol to handle it. And I think we're trying to do this here as effectively as possible. Having said that, let's jump on and move forward on our earning calendar, our first part of the webinar. Thank you for being patient with me so far. I do want to record all of these so there's a record of it. That's all. It's the best thing we've done. Since 2007, we have recorded, we have done webinars and recorded them. And I think majority of them, I don't know when we open our videos, they're posted here. I urge you to join so that if there's anything posted here, boom, you get a copy. You get a reminder on your Gmail. Best thing is Gmail for Google. This is a YouTube. Okay. And it's linked down here on the first video. Now, when does it get posted? Immediately right after it's post-processed here. So depending on the file size, we're looking at 20 minutes to, let's say, 30, 40 minutes, and then 5 minutes after that it's uploaded and it's available to you. Okay. Let me look at something else here. Now, let's see. Yeah, this one had a little bit higher than normal reading because there were issues that we discussed in the last meeting that exactly this thing performed, and we'll go through that. I'm talking about SPX as if it was like a scripted by central casting. Yeah. So. Okay, we started to, as you know, I said I want to get long here. This is oversold, and on a leg down. I said I'm not ready yet. On a leg down. That was Wednesday. Then Thursday and Friday we got our leg down. So let me go that too. I'm going to show you on the chart here, just as a reference. There, come on. Oops, I'm going to go there. Jack, hold on. I gotta stop this for a second. 1 second. Yeah, I'm freezing the screen for a moment because going to a place I cannot have it recorded. Sorry. Yeah. Okay, here we're back. There we go. Okay, there we go. Okay, as you know, that's different chart. As you know, we were here when we did the last webinar. I think was it 6? Was it 8? We were here. Yeah, we were 6, 7, 8. We're about here. I said we have a test here coming on a 200 bar, the white line, and I would like to get long, but I don't think we're done. And I want to get long on the W, the second leg. Okay, that's not a perfect W, but this is what we got. So over the weekend, after these 2 days, I said I'm ready to get long. Now, Timer Digest give us the last known close of SPX. That's crucial. Why? Because they don't want to argue about the price. ES could be, you send an email on ES, by the time they get the email ES itself has moved. So it's not, they cannot verify it. So it's always they give you last known close. So they give us Friday close, and we went actually below that. That's fine. Because remember, on my average of, I posted on Twitter today, let's see. I said to, there was a question from a gentleman, I said to If you look at it here, hold on, if you come here, I said if you take a look at it, here's a more important. I'll get one back test. Oh, they were asking. Here's the data. We have done 168 trades, market signal, in over 277 trading days. So our average is about 12 trading days. Now there's about 125 people in Timer Digest, which is this is the ranking. So the point is over a period of time, we're not trading it. It's a competition, but they give you last day close, so it's a known close SPX. It washes out, and it's every 12 days, not day trading. So on the average, so it washes out. They have the same rules. They apply the same rules. Our cutoff, I think, is midnight. Midnight. If you send them email midnight, they give you last day close. If you send it after midnight, you get next day close. Okay, that's why my emails go out later. I think maybe midnight. It could be midnight Pacific. I'm not sure. I think it's midnight US, continental US. So, yeah, don't forget that. Forget Alaska. Yeah, but anyhow, that's what the email went out that we're going to get long. Of course, we had a little bump there and so on and so forth. But I want to go through that now. SVP and signature was taken over. My attitude, I said in the chat room, was we've got the gal in charge who has a playbook. It's called Auntie Jeanette. Okay, Dr. Yellen from Berkeley. She was the head of its first chairman of economic advisor at White House. Then she was a Fed chair. Then she became Treasury. We've never had in our history one person who's done all three. And when she was CEA, it was right when I believe right after Obama came in, right during that 2008-2009 debacle. So she's seen them all. And then, of course, prior to that, I think she was part of Board of Governors, maybe a vice chair. I'm not sure. My memory is a little bit murky there. But and then of course Fed chair, and then now Treasury. She knows what she's supposed to do. That's why you had the combined message from Federal Reserve. I posted on Twitter again. You can follow me there on at Hamzei Analytics. No dash or anything, just Hamzei. There we go. That one. And there we go. This one. And we said, look, we are going to work out of this, and we have very strongly. The key part for me was the backstop. When they said all your deposits, your non-insured deposits are also good, that stopped the run. They had to. Of course, today they came in with a group of 11 bankers who put up about 30 billion with a backstop to them from the Fed. They're not dummies. Jamie Dimon is not a dummy. Okay, I've had the privilege of meeting him a couple of times. The seventh market cap stock on Dow, and number one bank. These guys are no dummies. Of course, Wells Fargo, Goldman, Morgan. They come in. They say, "Listen, we'll help. We don't want Fed to come in and help, but you got to give it back." So they put 30 billion to rescue FRC, First Republic. I understand in Brentwood, courtesy to cash, but to California, there was a line at the ATMs there over the weekend. So they had to do something. So I know. Now, SVB, two problems. The rolling back of the regulation in 2018, and you know who did that. So you go take a look at that. That was one. It's just like 1999, where another person did the wrong thing, which was get rid of Glass-Steagall Act. I was in LA, and a lot of my friends would argue. I told them this is the biggest mistake we have done. Oh, wow, Fari, when you worry about this, that's from 1933. I said, watch me. You had 2008. You can't have an insurance guy come and give you what to do with the stocks, or a commercial bank doing investments, or vice versa. That was the biggest mess. This time was that smaller banks not requiring from a 50 billion and up to have back test or stress test. I'm saying stress test. This is not needed until you're 250 billion. And the number one promoter of that was the chairman, is it Greg, I forget, or Gary something, was the head of SVB. And he sold the stock a few days before. He's going to have his tail in a ringer here with the Feds. They're going to knock on his door one of these days at 6 in the morning. So we're going through that. I think it's getting healthier. And I just had a note from Anita in our chat room that says, I'm reading it to you. As you know, the Fed balance sheet just came out. Where's my mouse here? There we go. Fed balance sheet just came out, and she posted our news for us. Fed balance sheet jumps to 8.69 trillion. Dennis, are you sitting down? On March 15th, from 8.39 trillion on March 8th. So with 1 week, they put another 300 billion on the balance sheet. Dennis, you need to go in there and help them out. This is nuts, okay? One day you want to buy a piece of gum, you got to pay $1,000 for it. Yeah, so I don't know. It's nuts here. So, but they can't have a run on the bank. On Friday in the chat room, I said last week, I said, there goes Uncle Jerry. I think they're going to take a pause. Now, today, maybe Christine Lagarde from Lagarde of ECB gave him a cover, but I doubt it. The data for CPI was up there, but PPI was lower. I think they have to take a pause. Definitely 50% is out of the picture. Maybe 25 or the pause. I favor the pause. Okay, so that at least they give a breathing room for everybody here as we go through this. The biggest problem is these idiot bankers who did not understood treasury risk and how to manage or hedge against the interest rate risk. And I think Goldman is going to be into a little bit of trouble too. There's a talk of they made $100 million to dump what SVB had, which was 1.8, and they lost with 1.8 billion. That's what caused all of this, Fari. And then, of course, the stupid guy comes and says, we are in trouble, the CEO. Everything will be fine if you don't take your money out. Hello? I don't know where he went to school, where he learned his treasury markets timing, and also, bedside manners with the patient being his customers. Of course, the guy can run out. Of course, Peter Thiel added to that too by basically saying that to his portfolio guys, I'm out, you get yours out. First day they had 42 billion out. As you know, there's a 7% rule with the banking and commercial banking. So you can imagine what it does for their loans. If that deposit base goes out that fast. And this was a spiral. We are going to get cleaned up. That's all good. PPI was a good report. I like that. CPI did not. Also, housing data is a little bit lower. I think retail sales were a little bit lower. So we are slowing down. There's no question that these high interest rates are taking an impact. Just talk to any of the realtors down here. They're crying blood. Okay, they're not just crying; they're crying blood. Okay, so this is one of the toughest resilient markets called Naples. Okay, so at least half of the Midwest is here, seems like, and a few transplants from New York. But my point is, I think we're getting to a better environment. Of course, the big daddy of all is your non-farm payroll. They're just too strong. Keeps coming strong. So a pause would be good for everybody. Now, the problem with this backstop is a little bit anti-inflationary, and so that's we're throwing a new monkey wrench in there. Now, depends who you talk to. Some economists will tell you, no, it's inflationary. We'll discuss. We'll see. So, what do we have for tomorrow? Hold on. Let me look at housing starts. I actually missed this. Hold on. Let me take a look. Come on, load. Okay. Yeah. Okay. We came in a little bit better. Yeah. So I think maybe the expectation of maybe a little bit of a lower just a future expectation. Remember, data is looking back. Future expectation of the rate should be lower. People are getting more stuff done, building more and getting permits and all that. They're a little bit above consensus. Again, I'm not an economist, but I know what to look for. Jobless claims is, and I read a lot. Jobless claims came in, I think it was at 211. I remember Nancy reported this morning in the chat. Yeah. There we go. Came 192. Oh, 212 was the expectation. Came in, they adjusted prior revised from 211 to 212, nothing. 205 consensus, came in 192. Yeah, it's all good. I'm sorry. JavaScript drops. Hold on. This is more people, getting more hiring. Okay, getting more hiring. Sorry, it's been a long couple of days. Yeah. Okay, Natgas, The Fed came in a little bit higher. We talked about that. What did the Fed do? This is a good indication for Mid-Atlantic manufacturing base. This was the problem. Yeah. This is the problem, which is also anti-inflationary. Yeah, it's down a little bit. Yeah, so you get a little mixed picture there. To me, still, what matters is job non-farm revised. I don't look at the current number that high. I want to see what the revisions are because sometimes we have big revisions as the survey is complete. I think we went from 517 or 513 down to 507. So there was a little bit right down there. Yeah. Oh, there's a comment on CNBC. Balance went up by 297 billion. They think half of it was to bridge the bank's setup. Yeah. I think this was coming. Why would somebody expect not? If you don't know how to do, remember, I was doing the Richard role, the VP for mortgages at the Goldman Sachs, not Morgan Sachs, Goldman Sachs, and he's the owner of the proprietary core for payoff. When you refinance when you refinance your house, he gets a few basis points from everybody. Yeah. That's why he doesn't never have to work again. And now he's busy with his restaurant and his winery in California. But you've got to go into the treasury market and hedge your risk. I don't think this bank knew what they were doing. SVB. Of course, definitely, the signature is different. That was crypto. And now crypto ran up. Why? Because they like they took it as a positive note that at least crypto is good. Crypto always gonna be a problem. I think so. Because you're dealing with the Fed. Fed doesn't like it. Yeah, I guess more about First Republic. Okay. All right. On the news. So that's the calendar in front of us. Tomorrow's expiration. The futures will stop trading at 8:30, at 9:30, or is it 8:30? I forget. I think it's 8:30 Chicago. I think it's 9:30. Yeah. The H contract. We've already moved to M contract. Why? Because we use CME. CME has a published schedule now when the roll date is, and now everybody's following it. Before it was discretionary. And some people would start on Wednesday, some by Friday. We always did it on Fridays, but now we're starting on Monday. Actually, Sunday night we posted on our OTF charts because they deal with block trades. You've got to have that contract in to accumulate the data. You can't change symbols in the middle of the day. So, and this is pretty good. Friday you close. Those are the big players. You can still trade it now, but it gets very, very short. Now, here on Monday at one boo. As you know, you saw my office there on the Twitter picture. My new office almost looks like that, but here we go. This is my office there. So what happened there was on one of these, I had edge contract. I didn't notice it. So I got in, start trading, and I see all of a sudden it's like lethargic. Something is wrong there. It doesn't match anything else because other machines. Well, I have to change them all the machines. You got to hand roll them up to the next contract. I made a boo-boo. So that caused a little problem, but I recovered. But when you get into trouble, you got to pay attention to the end, recover, and kind of lose your bias, so that you come out, rethink, and go back in. Admiral Esposito, the big option trader from Chicago, says, "Put your face in a sink of water with ice water in there. Put some ice in there and water. Put your face in there. Wait 30 seconds, then come back." That's what you used to do at SIBO executive bathrooms there, because of course he was high up there. So he would do that literally every once in a while, get in trouble, and he would come back. He would tell his clerks, "Clean up the deck. Just turn off all the bid ask on the names they're market makers." And he had about 20 names. You can imagine size of the a bid ask they have to worry about because of that. What do you call it? So many strikes you have and the expiration. So you have the strikes and expiration across 20 names in biotech. Yeah. You get into trouble, you stop everything. You just go out of business for 5 minutes. You come back. We come back correct. In between, he's got his face in ice. Why? You guys give yourself that shock and say, fast is what we're going to do. Remember, there was a trader in SIBO, option trader SIBO, that used to tell me. He was actually part of Option Institute. He says, in this business, and think about this, in this business, you can be wrong, but not for too long. Okay? You can be wrong, but you got to do something about it. You can't sit there. Well, I wish Fari was listening to him yesterday. Yeah, I made a couple of mistakes. And again, because Tuesday was such a big day for me, I got a little bit cocky, and that's not good. Market would humble all of us, at some point or another. If you haven't been humbled yet, either you're not trading size yet, or you're Six Sigma advanced. You're smarter than Bill Gates, okay? And so, or Elon Musk. So I'm not talking about their politics. I'm talking about their IQ. But we all get humbled. So, and yesterday was my turn. So, having said that, let's go to charts. What time is it? 5:14. Yeah. All right. First chart I put on Twitter today. I said this is a timer chart. This and more will be discussed. You see the divergence? Right there. Okay. Pretty strong there. And we're pulling up. And so, at least for time being, we've gone up. Now, remember, we never make bottom. I'm not saying this is the bottom. I don't know where the bottom is. Nobody knows. But we do not make even a local minimum or a bottom, short-term bottom, unless somebody big goes down. And this was not a small bank, number 16 on the list of banks. And they've grown from 50 billion to 250. I think from 50 billion to about 209 billion, because mainly of there's no stress tests, and they were doing. They were one of the unique banks that did portfolio founders, cash, payroll, so on and so forth. So in Silicon Valley, they've been there. As a matter of fact, I remember when I was looking for venture capital money, the two banks were big. SVB was there, and the other one called Bank of the West. And the VCs would tell you, you guys start working with these guys. They're going to be your bank. Why? Because regular bank will not lend you. There's high risk, and they're not going to be involved. They need some VC money, and then come and help you. And so this domino effect was too dangerous. We had too much concentration, and of course they didn't know what to do with interest rate risk. So, oh wow. Other they had to go up north to Napa and talk to Richard Rohr. Yeah. Okay, big differential jump in the CI diff. CI diff have rotated now. We're still low on breadth thrust. You could see where we were here. That value was 326. What I talk about here is what? Launchpad mode. It's not a vocabulary. It's a vocabulary page. That's from a drop-down menus of our main website. This is the launchpad mode. I'm not saying we're going to go nuts, but we're going to at least challenge this area, I believe, 4,200. We have made a local bottom, local minimum. We're going to go through 50 after we have done the 200, go up sigma levels, and the last what do you call swing high was on 2nd of February, and value was 41.95, say 42. I think that's our next target there. Okay. And where you hide? You hide in FANG. Look at it. FANG has really shined the last few days. And you can see what's been going on with NASDAQ. Okay. Moving forward, canary in the coal mine. We still have issues here. There's no green light, a steady green light anywhere. We get green, red, green, red. The transportation index is at 200 day. And of course, FedEx came in after the close, a lot better than expected. We'll see what they say with a conference call. But I would watch this for guidance in the morning, early in the morning, to see how things go. Where FTX opens and also what's the corresponding transportation. As a learned hand told me the other day, over the weekend actually, he goes, listen, I don't care what future. This was like an hour before, no, 2 hours before. The Fed. I mean the Globex opened on Sunday, and so he had sent me a text saying, "Can we talk?" I said, "Sure." I called. I said, "I'm thinking of going long, but I don't know how things are going to be. I got to do it before Globex opens. I don't want somebody coming to me and say, 'Oh, you look at how Globex opens, you jump in to get long.' No, I want to do it before. That's why my mail went out to everybody, both to Timer Digest and members of PMT, saying this is what we do. We don't put that on Twitter. That's for customers. We're going long." And of course, and I said, "Well, that's why I worry." He goes, "Don't worry about that. What matters is what we open. What matters is what the cash open happens. Where the big boys are in size. Okay, you can have a small hedgies jump in, jump out overnight on a Sunday night. Don't move around anyway. You want movement when you have liquidity. That's what matters. If it's illiquid, the moves are going to be exaggerated anyway. You want to have liquidity and move. Okay, again, somebody with white hair and been around there quite a bit. I think he's been in the market at least 40 years. He's been a client of mine for about 20. So, though I'm really inside and out, he's very good in calls. And he said, "I agree with you. I agree with your call." And look where we are. So I would watch that for where SPX is going to go. That's crucial. Now, I don't know why Russell is not behaving as better as I expected. As you can see, now that's the small caps. Oh, I'm sorry. Small caps got derailed. Yeah. And you see the big caps are there. Yeah. That's answer my question. Yeah, but remember, this should usually lead. That today, actually, we didn't go up until it got a right footing, the Russell futures, which is RTY. Or you can look at the smaller, which we added to our chat room, the smaller chart, which is micro Russell, which is M2K M23. That's Mary number 2, Kilo, Mary number 2, number 3. That one we start plotting because we want to look at his IV levels, so the initial balance. All right, the trenders. Okay. Also, another signal here, which we talked about last week. We were having a lot of negatives. That's usually a bounce coming. Okay, not this one, but we had a number of these. Listen, look at this. They were all in negatives. Looks like only one of them was not in negative. Even that was close. That's usually when the turn comes. When they're all very high, we drop down. When they're all very low, we go up. So 50, 200. Now, this is not something you and I are going to use. But if you're running a portfolio, this is your rule. Because they're going to grade you on this. They're going to agree with you to buy or sell, the investment committee. But that's how the big boys play. Look at the moving averages and look for a golden cross. Okay? And so that's good. This is good. This is good. We just made this in NDX. Okay? So again, and D trender is a simple code. Price minus the moving average. Very, very simple. SP1 Momo, okay, and look at new highs and lows. Obviously, no new highs, and the lows went up, perked up a little bit, and they died. If you look at it in a weekly basis, okay, so each bar is a week, it gives you a more realistic picture. You can see what happened in during the COVID. You could see what happened this year because of the interest rates, and it's kind of quiet right now. So, as this rises, we're near the bottom. Okay, you can see it here. We're not there right now. So I think this is just a temporary thing. Let's talk in 90 days, see where we are. And of course, you're not going to get any new highs. We'll be battered. Okay. As to SP1, we were down there. We're at -3 sigma or -2 between those two. And big move early on by Momo. Actually, I posted some charts last Sunday. I just didn't have the time between the software release that we're looking after and the opening at 6. In fact, I want to go long. The best I could do, post it on to actually Admiral Tico, posted on his feed. Okay, he's the XO, he's the executive officer here. And so I would make sure you follow Admiral Tico. He does interesting charts. He posts a couple of stuff today. Go to TweetDeck. That's Admiral Tico right there. And remember, he's a KCP, so he's knighted. Yeah, he's a knight commander. But and his numbers are rising fast because of the charts he posts. So make sure you follow him. That's one. The other one you want to follow the our videos. Yeah. Okay. And so he posted a bunch of charts, one line or two lines as what do you call it, as explanation, and that was it. And then we RT'd it ourselves. Let's go to VIX. Usually this is a buy signal. When you get multiple bars above 3 and 4 sigma, remember it's a reverse asset, and long bars, the range of each bar is long. History has taught me, especially when I started looking at it from a sigma channel, and this was, I think, Dr. Whaley, the guy who did VIX himself, the old VIX, not this one. This is from this was homebrewed at SIBO. The VX, now it's called VXO, is original, and VXN is his too. He taught me it's that how to measure VIX against itself. The best tool I know is sigma channels because they recur in nature. And if you look at this, history will show us this is usually the top of the vol and the bottom of the market for the time being. Again, local minimum. This is a data issue, and they haven't been able to fix it. I have no idea. We don't have these long bars. They can't. This is something wrong in calculations. And frankly, between you and I and these four walls, this is SIBO's product. This is Dr. Whaley's. Not up spending any time on that stuff. So the chart looks weird. So I think this is the same too. This is the same protocol. This is Russell. Yeah, that's against Russell. I no longer post the vol for oil because they use USO, and USO is meaningless. You have to use CL against it. The problem with that is CL is a CME product. If you know the politics in Chicago, across the Van Buren Boulevard, one side is SIBO, one side is CME. They've had many lawsuits on who owns what. So they're not going to work together, especially on CL. So they're using USO, which is a very muted ETF. It's a great Barton. I'm sorry, I forget his name. The guy who wrote Random Down Wall Street, Bertrand Malkiel, said, understand the construct before you make a bet on an index. Understand the inside. And so I just don't like the oil vol. Anyhow, but very high readings. You see that? That's the SDW. Very high readings, that's usually end of the move. And we should pull up. SQ, hello. I think even the big boys panic this time. Look how on the lower end they were. We almost hit midpoint, which is 140. Empirically. Not by design, but by empirical observation, excuse me. We almost hit midpoint because you have a 110 low, 170 up, 140 is right in the smack in the center. We pulled up 3 sigma. It was dead. It was quiet. And we pulled up. Even the big boys start putting some bets on. I think you're going to see this pull back because you can't fight the Fed. The backstop that Fed puts in, you're out. It's like Tiger Management going after, as an example, going after let's say Bridgewater, such a much bigger firm. But there's nothing bigger than Treasuries. I'm sorry, the Fed, because that's the biggest hedge fund out there, really, and it's a part of its Ponzi scheme. Think about it, yeah, because we're borrowing money to pay the interest. If that's not a definition of Ponzi scheme, I don't know what that is. Now, my Latin isn't very good, but you can ask Dennis. He can probably translate that for you, but maybe he can explain to you what Ponzi scheme is. But to me, it's one word: Fed. Yeah. So $34 trillion, not a joke. So, Treasuries. Okay, we pulled up a little bit today because market rallied a little bit, stabilized a little bit. So the Treasury came up. But you could see that dramatic move, especially I don't know if there's what's the symbol for 2-year index of SIBO. This is a yield to maturity at TradeStation. I don't think they have any. It really comes from SIBO, but you could see that dramatic move drop in the last few days of 5, 10, and 30. But now it's stabilizing, and we need to stabilize our treasuries, otherwise, absolute chaos. All right. You can imagine we were near first level for the month, the resistance level. We went down to below the first support level, all in a matter of like 3 sessions. Boom, boom, boom. It's unheard of. All right. Okay. As I mentioned last week, we have to roll our VIX spread. VIX went off the trading block, as you could see. Last trade. Is it next week then? Traded today? It shouldn't have. Interesting. Anyhow, we rolled on Friday our VIX contract, the spread. So we're now, and I posted on the website too. This looks weird to me. Hold on. Long J contract, which is April, short July, because you don't want to be long in the current VIX contract that's expiring immediately. Okay, I believe it should have been, what do you call it? Let me open, sorry, I got to do this. I'm sorry. But I'll show you what I'm doing. So, options. I want to look at expiration for VIX. This doesn't make sense. This should have not traded today. So, hold on. Unless the data here is wrong. Hold on. 1 second, it's loading it. We're looking for option chain for it. Huh? What happened? There you go. Okay. That's a VIX. Okay, close that. Yeah. Oh, March has got 4 more days. The expiration is on 23rd. I see. Okay. This is the monthly. I misread the last one, but we're okay. Some will roll this week, but you know what? I'd rather be ahead. Okay, sorry. Okay, but it's fairly common to look at the zero line, what's happening around it. If we must, I can go here quickly and change it back, because not usually we roll on a Friday before. If it's 4 days, that means next week. So I'm going to roll this back to 8. That's why it shows the trade. So I must have read the weeklies. I forgot. VIX now has got weekly too. All these options, they're just really, really adding to a risk, in my opinion, because especially for novices who don't really understand what they're doing. They buy something that they think's cheap. They don't understand what the vol they're paying. Okay, let's look at this. Okay. All right. So again, here we went through zero. Yeah, no question. We went through zero. So tomorrow we have to roll that out. And then on Tuesday, it stops trading. And so tomorrow night, we go to J contract here. Let me save this before I forget. Okay, now let's do analysis. Again, you can see the sigma levels. You could see the lows it was predicting. Okay, and now you see near low, but a huge drop in the spread. That's extremely bullish, and that's why you have this bar. So it cleared a bunch of shorts. The system is there to clear a bunch of shorts on the bottoms and clear a bunch of longs on the top. Why? Money doesn't grow on trees. It's simply transferred. Remember Gecko? Yeah. It's simply transferred. So next question becomes, Dennis, is for Dennis. How many boats do you need? Stop trading. You've earned it. Bless him. Dennis is an old warrior. Yeah, so I don't know how many boats he needs, but that's what Gecko was asking. Or Bot Fox was asking Gecko. Yeah. How many boats do you need? And the answer was, I don't create money. It just gets transferred. Money is an illusion. So, yeah. Well, next time I see Dennis on a 70 footer, that ain't gonna be an illusion. Okay, it's a 70 footer. Anyhow, moving forward, SP2. This is probably my oldest indicator of my own. And somebody asked me on the Twitter, what do these numbers look in 2008? I have no clue. No, I'm saying in 2000. I have no clue. And I don't even know the guy. It takes time to research. I'm not doing that. But enough to say that, look at my time and digest, I've done okay. Okay. And so some of these indicators were available back then. Some weren't. This one was. And this is simply, it's a short-term cycle analyzer, okay, of number of inputs as far as internals, and you know that. It's volatility, it's advanced decline, It's volume, up and down, it's tick, and so on and so forth. So you massage them, and we have to stop massaging this in 97, I think. Yeah, somewhere in 97, I think. Yeah. I'm not sure if it was 96 or not. Maybe I started at 96. And it was a project for a friend of mine, and he let go. He was working with me, he let go, and I just said, you know what? I'm going to take over this. He was going through divorce, and he says, yeah, do whatever you want to do. And of course, it took some time to complete it. And then several years later, as we had better trade station, we added the colors. Early on, we didn't have the colors to show the direction there. But you could see massive divergence. Okay, so I'm sorry, that's not divergence. Strike that. That's not divergence. Hold on. Yeah, that's not right. Even this is lower. Yeah. No, but you could see they were extremely oversold. I think this was a Friday close. Let me see. Yeah, which March 13. Hold on. I'm sorry. This was Friday close. Which was 19 below 25. On a Monday, we even went lower. So if we haven't flushed the week longs on Friday, this set somewhere have been gone down to, and we did. I'm saying. Yeah. You guys save a lot of money. Yes. I'm reading his comments. He says, I'm going to live to be 110 years old. I understand. If I understand, your parents live quite a bit. Yeah. Bless them. Bless their souls. And yeah. Well, you're in a great area. As long as you exercise and watch what you eat, yeah, and not smoke or drink, you'll be fine. Maybe no more than one glass of red wine a day. That's it. No vino. Easy on vino. Right. I know a little bit of Latin. Yeah. But anyhow, this cleared that, and we rallied. And then, of course, this other thing was FRC yesterday, and then I told myself, as we learned that from Hank Paulson, when you're faced with a bazooka, you're going to act differently. It's not a little Bernot or a M16. It's a bazooka coming at you, and that's what the Fed did today. Came in overnight. We got to do this, and this morning they inked it, announced it midday, and here we go. All right, volume up and down. Volume was not that great today. There's an up and down ratio. I'm sorry, the volume ratio. But notice that how many days we hit 90. That's a flush. We get that. Tico posted it saying we're going to only go up. Issues when. So remember, intraday trading is not market time. Okay, this is market time. Intraday, you really need to have much faster and indicators, and also you can't sit in a position very long. You go from one fear to greed, from greed to fear. It's a zigzag up and down. This is a different animal. You can buy options here. You can buy SPY. You can buy QQs. As you could see, obviously, the brunt of the pressure was on the SPY and the SPX and the components. Again, big cap text weathered better as depicted by NDX. Okay, and of course, Russell, they got a little smashed. Why? Because of these guys are very interest rate sensitive. Yeah. And they're not as easily lendable as the big guns. By the way, majority of the money from here, I hear from the smaller banks, went to JPM, Morgan Stanley, Goldman, maybe even Bank of America, from what I read. So the bigger banks were inundated with people coming in because they were scared of their money. That's bad when we have banking run. That's just really bad. And you have to stop it early. Can you imagine if I had not done that? Only saved those two? No, they did the right thing. You got to come in with bazooka. I like B2. I prefer B2. So you take them out from 40,000 feet. And you don't take the building, you take the whole city. Anyhow, LP, is this LPI? No, BPI, Buying Power Index by, again, Larry. By the way, when we post these charts on Twitter, I want to just remind you every so often, Tico is very considerate of you. He posted must-read link, which we host ourselves. It's not ours. It's by late Paul Desmond, a great guy, absolutely great guy, of Larry's Report, which he worked for out of Tampa. And so you might print this out and read it to really better understand the charts. There's also Walter Deemer. You want to follow. It is really good. So is Norseman. I don't know Walter, but I've got his book. A Norseman, interesting guy. So you may follow them. You'll learn a lot. And this business is all about learning. If you're not learning every day, you're going to get into trouble in your trading. Yeah. Okay, now BPI is theirs. And I don't have the document for that, but one of my guys, Peter the Cook, who's our chief moderator in the chat room, he wrote the code and he said, Fari, I only take the long side. I don't like the shorts. Fine. I like both sides, long and short, because I like the money to work all the time. But of course, you got to get burned on the bottom and top. You have to remember that. So in between, you make money at the what's called a bias change. As you roll over, you're going to have some changes that are going to be ugly and they're going to be difficult and confusing. Why? It's a thieves market. Money doesn't grow on trees. Yeah, they buy a little bit, then they sell a lot. They sell a little bit and buy a lot to bring you in and skin you. But if you look at this takes some of that noise out. Notice NQ went long. Still, Russell is short. Not a bad signal. EMD, which is mid-cap, short. And then, unfortunately, ES is still stuck here. It'll probably change today. Okay. And the data, I forgot what this data is, but it comes from TradeStation. Some value index that you have to have. Okay. By the way, this is what I've been looking at throughout today. FCR, First Republic. Look at this monthly bar. Made a new low. Well, if these 11 banks didn't come in, it would be a lot lower. Yeah, maybe even zero. But can you imagine? It was 120 beginning of this month. Okay, it went to low of 19. It lost 80% of it, yeah, in 1 month, in 2 weeks. Yeah, unbelievable. I would, if I was Jamie Dimon, I would fire all the mid executives to up. You can't fight this. You gotta get rid of them. You gotta bring new people. I'm sure the FTC does it with the SVB. You gotta get rid of these guys. They didn't know what they were doing. And with more money, oh no, you can't make mistakes with new money. You gotta be out. Try Uber. Yeah, try Uber. Okay. Last but not least, our last chart that we talk about, and then I'll take your questions. Okay, right here. Let me close this down. I hate this. Okay, let me go to 5 year. Remember, this you can post yourself. Update yourself. That's good at the end of the day. So March 16. Okay, that's it. That's where we are. What did we talk about last time? I said I am not happy with 45 to 55 area, and we were sitting up here, right at 55. I said this is what's below us. We have to see how it behaves, and you saw what happened. It just got killed. Let me go back to like 1 year and see that a little bit better now. The 5 year is good to find the lows and highs from an empirical standpoint. And remember, it's a percent. It's a scoring indicator. 50. It's a 500. It's a percent of components of SPX over their respective. That's a keyword. 20-day moving average. Now let's go just for fun for a second. Go here. By the way, that's how I look at charts. I go back and forth, look at this data, different resolution. I don't change the inputs. I look at different resolution to see both the real highs, real lows, and kind of perspective. By the way, this is the greatest watch ever built in my world. This is for Blue Angels. It's by Citizen, and it's got solar power. Yeah, and it does three what do you call zones for you: New York, Chicago, and London. It's all titanium. Beautiful watch. Okay. I don't have shares in Reg FT. I don't have shares in Citizen. Yeah. Not promoting anything for them, but if you like watches, this is one of the kind of mid-price watch, but one of my treasures. So, it's made for Blue Angels, and timing is everything. Nobody keeps the time as good as Citizen. That's a known thing. That's why the Blue Angels team picked it as their watch, and this is beautiful. All right, so going, I don't know what these characters are. Anyhow, look where we hit. We talked about 55 to 45, always a tough area, and we're ending right about there. So the jury here is not out because there's a little bit of delay here. You have averages, and it's against the 200-day. We'll improve up, that's my guess. Okay, but what do I want to see? This line taken out and that line taken out. Then I'm really bullish, not now. And those are 50 and 20. The default is 10 and 20. Get rid of that. Use 20 and 50. So take the noise out. Okay. That's it for me. Those are my points. I'm glad you guys joined us. Any questions for me I could answer. And yes, this is recorded. It will be posted right after the post processing is done. Right after we're done here. It takes about, I think, 30 minutes, 40 minutes. Okay, 2 questions, or 1 question. Michael, how are you? Please get the X looks possibly like a edge and shoulder bottom with the right shoulder forming a flag that has broken out to the upside. A good long-term bottom? No. No, sir. I mean, I see what you're looking at. Michael has been with us for years and years, always a true gentleman and avid market timing watcher. And I say this, Michael, it's not what we know, it's what we don't know. And the techs have been under pressure for a number of reasons. Look at Apple, look at Google, look at Tesla, maybe exception of Microsoft. Every day seems to be something with it. What you see here, though, is a temporary flight to quality. This was a flight to quality, except it was flight to FANG. More importantly than even treasuries. It was flight to FANG. They don't need money. They have huge balance sheets. Some of them fortress balance sheets, for example. I think Google is the biggest one, and then Microsoft. But they're not out of trouble in terms of legally, other issues, acceptance. Hold on, let me close this. European Commission, possible antitrust stuff. So I wouldn't go there per se. But thanks, Dennis. See you later. But obviously, chart-wise, you're right. I just don't think we have tailwinds yet. We may have some headwinds still ahead. And I don't think we've seen the low of the market for the year. No, I don't think so. Why? I haven't seen a big volume of people thrown baby with bathwater out yet. So I think we still have a lot of work to do. The interest rates is an issue. The all clear sign from the Treasury is, not Treasury, I'm sorry, from Fed is not out. We also have the debt limit. The debt limit is a very, very dangerous game. That is, are playing. And the problem is that argue about the budget. That I have no problem with. That's healthy. But this is the budget you agreed on last year. You got to pay your bills. And so that's one issue that's going to be a big one. That's a dark cloud on the horizon. So with that in mind, Michael, I don't think we have seen it. Now, is there a selective way of doing this? Yes. Yes. Go to like a swing chart there. Look at weekly. Okay. And go. As a matter of fact, hold on. Let me do something else first before I go there. You bring an interesting point up. Let's go to NDX and turn it to weekly. So we do it right. Yeah, you write the questions. Here's your weekly NDX. Okay. Yeah. Daily chart was doing that, not weekly yet, in my opinion, if I'm reading the chart right. But it was a key level. This was a 200 weekly that found support. And hallelujah, it did. Otherwise, we could have been down here, sigma level. Remember, if these 0 sigma and 200s don't hold, you're going to tick down one sigma level at a time, and it's going to be very costly. Look, I got friends here who are in FANG, and they are just decimated. So, but they haven't thrown it. The baby with the bathwater out. They're still holding. Okay, and when they do, that's probably the low. I hope we'll never get it that way, but I think that debt limit is an issue. But that's a 200-day. Now, what I would do is, and here's your, see, we still haven't gotten there yet. 37.31 here. Yeah. So on SPX, we're not done. And this is interest rate sensitive. So now let me put this back where it is because I get confused during the combat zone. That's that. Let's go here. And this is what I suggest you do. Okay. Just a suggestion. Forget FRC. But put in Google. And I like the L, the one with the voting rights. Okay. There we go. I would look at it weekly like that. Okay. Probably not a bad idea. Okay. Caveat is only the illegal exposure they may have, but you could see what's happened. I mean, they've gone back to levels here. They've erased something like 2 years out or more. No, well, 2.5 years out. So look at Microsoft. By the way, that's one way you find bottoms, to look at weekly data on the big caps, because the index goes where the big caps go, right? So that's what we're looking at. Look at where supports came in. 200 week, boom, boom, boom. Okay, and now 0.6, we went to 50 week, which is 1 year basically. And now we're at 2 sigma. Okay, so now they've gone a little bit too far, I think. I like it to go a little bit slower. This was a huge week for Microsoft. Absolutely phenomenal week. I recall somebody was trying to short it. I won't mention who it was, but I heard someone who said they wanted to possibly short Microsoft. I don't want to. I don't want to bet against. I forget his name. Brad something is the head of the guy, but I mean he's not a technocrat. He's a lawyer by training. He used to run Microsoft Legal. But the whole Microsoft team, Satya, of course, and what do you call it? The other guy, Scott Guthrie, who my brother used to work for. You don't want to go against those guys. Those guys are just incredible. So let's go look at Tesla. Here's your Tesla. Tesla is a different animal, okay? But that's where this is. And then you can see that probably has some work to do. Amazon. Yeah, this has got some work to do too. But I don't think we're done here yet. What I want to see is getting to between 2 to 3 sigma and holding. And we haven't. You didn't hold this. Went to here. Now this low. So if it retests this low, it will be a different animal. What's the other one we have? Meta. Yeah. Now that should be a little bit up. Yeah. Now Meta probably is a better play now than before. If you had the stomach to sit through this, and I have a friend who has, and it's a basket case. Yeah. Large position. No business being there. And you know what happened? He bought the puts. Why? Because he was buying puts here. I'm sorry, not the one. He sold the puts. 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 And they pay them because it went to 0 to expiration. So he sold the puts. He sold the puts. He sold the puts. He sold the puts. I won't mention any names, but a major option advisory service did the same thing from 1999 to 2002. They kept on selling puts and buying calls with that money. You can't go wrong using other people's money. We sell the puts, buy the calls. That works perfect here. And they had tremendous yields. Of course, I'm talking about 2000. But think of it, 99, 98, 99, 2000. By 2001, they were down here and decimated people. So things work until they don't. So when things don't work, you got to stop and ask why. And stop using it. So this is Meta. Sorry, I almost spilled some coffee. Diet Coke here. All right. So what else do we have? Amazon, Meta. Apple. Oh, geez, forgot the big guy. Sorry, forgot the big guy. Okay. Now that's a different setup. This is your Fortress balance sheet. Okay. And they give you this huge employment contract and bonus to Cook. More power to him. This is a different animal, but this probably will lead. So I would watch probably Apple more than anything else. And you can sample a little bit, but not NDX, not Qs. There's a lot of noise there. So remember that. Okay. Any other questions for me? But by the way, Michael, that was a great question. I just think I like to go out there and give a green green light when we have the debt sitting out of the way, because that's a nuclear option. That's not easy, and the people don't realize what the impact would be. I mean, you could drop, you could lose half of SPX in one day. Yes, half of SPX. Yes. So you could go to sleep on a Friday, and the SPX is trading around 4,000, and Monday morning opens at 2,000. That we gotta get rid of. Anybody who doesn't understand it, it's not even worth talking about him. It's noise. Yeah. It's an IQ issue. Yeah. Any other questions? I don't want to talk about you guys. I'm talking about in the Congress. Any of them who doesn't understand it, just ignore them. It's an IQ issue. Yeah. It's what do you call it? Idiots revisited. Any other question for me? That's not a political statement, by the way. That's reality of full credit and faith of the U.S. government to be put in play. That's wrong. Absolutely wrong. They have no clue what will happen. Yeah. Any other questions for me? Okay, guys, we went a little bit over. I'm sorry about that, but we had technical issues at the beginning. And of course, here we are. We went about 10 minutes after our time because we started at 4:45. So I wish you well. Good night to all. Thank you, Greg, for coming. Thank you, all of you, boys and girls. This will be posted right after I hit click to close this. It goes into post-processing, and about half an hour after that, I'll post it. Okay? Thank you.